Okay, hello everybody. Welcome to the Market Smith's webinar. And today we're going to go over the basics of fundamentals here and what to buy and really focus more on the fundamental story. Quick introduction here. My name is Arusha Paris. I'm one of the coaches here at Market Smith. And so here's the agenda. So we're going to go over the importance of fundamental analysis, and most of you are going to be familiar with that. But really, what we're going to focus on is just fundamental analysis as a growth investor. Okay, we've been doing this in house over 50 years, managing the markets. Okay, successfully managing the markets, and in the end, while we talk a lot about stock charts, the reason why great stocks go on these amazing runs because they have a great story and they have great fundamentals. And so we want to focus on some of these key data points that help us narrow down the list of stocks to focus on. Now, let's just make sure we're all comfortable with the webinar software functionality here. Whenever you have a question, use this little field. Type in your question, and I'll answer them throughout the presentation. So you don't have to wait until the end of the presentation. Okay, and a quick disclosure here. Okay, so let's get right into this. And so the reason why we focus on the fundamentals and the key kind of data points that we focus on is because it helps us identify companies that have these huge profit margins and increasing earnings and sales and growth. Okay, so we just want to look for these game changers, and so we're using these data points to help us figure out that, hey, some of these companies that have these big numbers, what are they doing? Maybe they have a game changing product and service, and chances are a lot of times they do. Okay, because how many companies can put up these monster type of numbers and not have something that everyone wants? So the one of the first ways that we'll really start to figure out that we might have something here is their numbers are just so much better than most of the other numbers in the database, or most of the other companies in our database. Now, another key point is to understand management, their outlook for the company, their profile, and really also their experience, right? A lot of the times, the best companies, the best stocks that have gone on these huge runs, they have innovative leaders, visionaries, that just see the world differently, and they've come up with an amazing product that everyone has to have. And so you can just think, I mean, it's just over and over again where you just see these great products. Think about, the iPhone and the iPad, right? And so they're all, it only takes there are only a few kind of unique individuals who can kind of not only think about those ideas, but actually execute them in a way where people are all of a sudden willing to shell out a lot of money to buy them, and they have to have them. And all of a sudden now we all have iPhones or iPads and stuff like that. Now, in the end, if you know that story, if you start understanding the management, and obviously finding the companies with these huge numbers is very easy with Market Smith. But once you understand that story and the management, the leader who's leading this company, you're going to build that conviction, right? You're going to start to understand that, yeah, this company, this stock, they're doing something different, and the stock is worth owning at this point, and that it's going to be that conviction that's going to help you hold through those times where the stock goes through a normal pullback. And so for me personally, that's always been the hardest thing, is holding through some of those pullbacks, and especially because it's never just one stock, right? It's all of your stocks are coming down at the same time, right? If we were just kind of trading in a vacuum, trading one stock at a time, it might be a little bit easier at that point. But we usually have 5 or 6 stocks. We're concentrated. We might be on margin. And then, of course, once we start feeling good about ourselves because some of our stocks are doing well, that's when the market comes in and really tests, and it tests our conviction. And so the only way you're going to be able to survive through something like that is by knowing that story, knowing that this company is going to change the world over the next 10 years, right? And they're going to continue to innovate. And Wall Street's behind the story a lot of times, right? And you're starting to see it a little bit further ahead, and Wall Street hasn't really caught on to that story yet, or they haven't, or not enough funds have caught on to really push it up even more and more. Now, Bill O'Neill in page 153 of How to Make Money in Stocks, just those key kind of fundamental data points. The stocks you select should show a major percentage increase in the current quarterly earnings per share. Now, very simple, but it's something that it's amazing how overlooked it is, right? We're always looking. I remember when I started out, we're looking for more stocks that have that are great values. That's what I was always kind of looking for, those bargains. I'm always looking when shopping for technology or whatever, some gadgets or whatever. It's always, I'm looking for a bargain. If I see something coming through some deal website and it's 20% off or something, I'm on that, right? But with the markets or the way we invest, especially as growth investors, it's a little bit different. Right, a lot of times the very best stocks are going to be higher priced, and they're going to be higher priced for a reason, because they have these major percentage increase in their current quarterly sales, and that's reflected in the price per share. Their PEs are much higher at that point. Now, the percentage change in the EPS is the single most important element in stock selection today. And that's in the next page of the How to Make Money in Stocks book. And once again, it's amazing at how, while we focus mostly on charts, everyone we all tend to just look at charts a lot, because it's just it's a lot more fun, I guess. And there are a lot more subtleties to it and detail in the chart reading. And but in the end, it always comes down to those fundamentals, right? It always comes down to those earnings and sales and that huge, great product. And over time, those stocks that consistently put these major earnings out there, major sales out there, they're going to get reflected in the stock price. They're just so much better than most of the other companies out there that it's natural for all the funds to just start, hey, we got to own this at least to show it on our prospectus. And now if it's a really kind of a larger cap type of stock or a more liquid type of stock, it all of a sudden becomes very easy for some of these larger funds to own those stocks, because they can park money in it. They can safely kind of put some money there and not have to worry about that, because that company is a great company. It's led by a great CEO, right, or a visionary who knows how to manage that growth and all that stuff. So all of this kind of work together. So even though we still look at a lot of those charts, it always comes down to these fundamentals. And it's incredible how when you go back and read this How to Make Money in Stocks book, how it just gets right down to the basics, right? And in the end, it's funny at how the way we look at stocks and how a lot of other maybe value investors and stuff like that, there's a lot of overlap there, because in the end, we still want strong fundamentals. Right, we're not disagreeing with we're just going to buy them at different phases in their life cycle or as a company. Right, we'll probably buy them a little bit earlier, and the ideal kind of way is we want to buy those stocks that eventually turn into value stocks, that are companies that are so great that they're around for 40 years, 50 years, and so eventually they become so big that they become harder to move, and then they become more of a value type of stock. So we want to try to get that growth phase in the run. Now, I've emphasized this enough, but I always like this chart, because in the end, the reason why we buy a stock, it's 70% fundamental. Okay, only 30% technical. So we narrow down the list of stocks to focus on using fundamentals, using those huge earnings and sales, using that management, the story, all of that stuff to narrow down the list of stocks to focus on. Now, the technicals, that's going to tell us when to buy, and then, of course, when to sell the stock too. Okay, but in the end, you're going to improve your odds for success, especially when the markets are doing well, by focusing most of your purchase on the ones that have some great fundamentals. And of course, they're in a good uptrend and they're breaking out of base and all that kind of stuff. So let's go over fundamental analysis as a growth investor. Okay, so the first kind of basic things, and this is why we have them laid out on the chart, the current earnings and sales right here. So I highlighted them right there, but on a quarterly basis, we make them very easy to see because when you're going through a ton of stocks, all of a sudden you see numbers like this, and it makes me hesitate. It's like, whoa, what are these guys doing? That first quarter, this March quarter right here, the previous quarter they earned $3.33. Now all of a sudden, a year later, they're earning $6.40. What's happened there, right? A 92% increase. Wow, their product, their services, in so much demand at this point. And then guess what? In June, it even got better, right? It went to 122%, right? And their sales are massive, right? So things like that. There aren't that many companies that can do this kind of stuff. And so Andy writes here, yeah, we have a search that incorporates that. You're absolutely right, Andy. Yeah, that's a really nice thing with our ratings and just the way you can kind of screen for this stuff. And a lot of our lists are naturally built in to try to narrow down this stuff, narrow down it from 5,000 stocks to a couple hundred that have this, or maybe even less than that have these monster earnings and sales at this point. So it's really nice where with a few clicks of a button, you can just narrow it down. And so you can do that very, very easily. And then you kind of go through them, and you're going to notice that even out of that smaller list, there are only a handful that are going to have these kind of numbers, and then the story and the management. So we always want to buy those stocks with those huge earnings, current earnings increases, right? Well, we call them accelerating earnings, right? Where you'll see 3 reported quarters, and they just keep getting better and better and better, or their sales get better and better and better. And so all of a sudden, that market that they're in is opening, it's getting bigger, and they're dominating that market. They own that market, and they're just their earnings are just going through the roof at that point. They can't sell enough of their products or services at that time. Now we'll also look at the annual earnings, because in the end, it's that time frame. The longer the time frame, that's going to kind of prove their worth as a company. And so take a look at this. The EPS numbers right here from 2005, $1.42. Then it jumps to $2.27. Then $3.93, $6.78. Look at that. I mean, it just keeps getting better and better. Then their estimates are even big. So, business is booming for these guys. Right? So we have that right there on the chart too. So we can quickly glance at all the relevant information. When you see something that's maybe setting up on a technical level, you can take a look at the fundamentals to confirm that, yeah, there's something here. There's something worth investigating, going further into the story. So a positive annual growth for 3 to 5 years. That's generally what we look for. That's what Bill talks about in the How to Make Money in Stocks book. We're keeping it, you can narrow down that list very quickly once you start throwing a bunch of these requirements in for the companies. So we're looking for great quarterly earnings, great quarterly sales, and then just a nice trend of annual growth over 3 to 5 years. And so we have that all laid out right in the chart. Okay, so it's all there very quickly. So when you look at the technicals, when you see something setting up, you can quickly take a look and say, yeah, they have something. It's worth looking into. It's worth going into further here. Now, in the end, it's always that new product, that new service, new management. It's that kind of extra work that you do on investigating that company where you're going to really start to discover that, hey, these guys have a real cool product. Or a lot of times it might be, hey, I didn't realize that these guys made this product, right? Or maybe it's a component within the product, right? I didn't realize that the iPad was using this chip in the product, right? Whoa, and they're the exclusive. This chip is the exclusive provider, right, for this the iPad or whatever. And so you kind of have the whole kind of the follow-on, the cousin kind of stock there, where they're all going to benefit if the iPad sells really well, right? So it's always looking for that new product, new service, new management that as a catalyst to help you realize that, hey, maybe this company has a chance to do really even better. That new management, a lot of times you can think about some companies that have these amazing turnarounds. And the reason they have that turnaround is not only because of that new product and new service. In the beginning, it would start off with a new management, just that new way of thinking, changing the culture, bringing in new talent, new direction, right? So that's why we have that as new management there, because it's amazing sometimes how you just have this innovative leader coming in, how they can change completely change and turn around a company. So, you think about the iPad as this super innovative product. I mean, this is probably the latest one right here, where you have the keyboard and you have the pencil where you can draw on it. But kind of the classic one is what I think about. It's not always technology. For me, I always kind of lean towards technology and stuff like that because I'm using some of these gadgets and stuff like that. So it makes it a little bit more sense to me. But you also have to kind of broaden your view too. It sometimes can be a place where you eat. And you think about, I think the classic example over the last 10 years is Chipotle, right? And now obviously the company's running into a little bit harder times now, or at least on a PR level at that point. But there was a point, and there was definitely a point when the stock was running where I was going there every day, right? So uh, you want to be aware of those kind of things too, right? If there's lines of all of a sudden, that you have to beat the lunch crowd because the line's out through the door. You want to kind of get that mindset that, hey, wait a minute, are these guys publicly traded, right? Because you might not even stumble onto the idea of originally in MarketSmith. You may stumble on the idea just out when you're at the mall, at the store, waiting in a long line, and you can pull out your iPhone and all of a sudden go through a MarketSmith chart, and you're taking a look at the chart while you're waiting in line, right? And you notice their huge earnings and sales. You can stumble in on that. That's happened to me before, where all of a sudden I've just stumbled onto a stock just by being out there looking at their products first. So just keep that open mind, because it's amazing how just one product can really change it around and really excite Wall Street if they've stumbled onto something that everyone really wants. So let's go over a few examples here. Here's Gilead Sciences, a biotech company that's done very well over the last number of years. And so take a look at their earnings and sales here, right? So I'm going to highlight first just those monsters. Look at those monster quarterly earnings and sales. How many companies put up numbers like this, right? I mean, just 208, 372, 252, 342, just these huge, huge numbers. Now, before that, take a look. 4%, 10%, 208%. So, I mean, it was increasing, then all of a sudden, bam, just this monster increase, right? So sometimes where all of a sudden that can kind of trigger me. Wait, what are these guys doing? Why are all of a sudden they selling something more? And a lot of times, especially for a biotech or something, they just introduced a new product, they got FDA approval or something like that, where now just the earnings are going through the roof at that point. Now the sales also, we're looking at that too, because we want to confirm both. We want to make sure that the earnings are as a result of that they're selling a great service and product, not necessarily just cost cutting, right? Because you can do that with companies if they're bloated and you're kind of go through and you start cutting costs and things like that, and that could boost the earnings for a little while. But that's not necessarily a game changing kind of company, or they don't have a game changing service at that point, right? It's when they introduce something that all of a sudden everyone needs to use their service. That's where you're going to really stumble onto something, especially if you start seeing it in the chart. So we always like to look at both. Are the earnings being confirmed by huge growth in sales? And so you can see here that back in 2014, yeah, they were definitely being confirmed at this point. Now, you can see their run during this time too. This was actually before those monster numbers right here. This is right around it went from 4 to 10 to the 208 numbers. That's kind of how the chart was looking at this point. And so if you thought that, hey, if the stock's probably done, it's already baked in, you don't want to necessarily assume it. This is why we'll let the charts kind of tell us, if you like the story, like the numbers, tell us when to get into the stock, and we'll let the stock, we know when to get out if it goes against us at that point too. So this is where it started having that accelerating earnings and sales, and it went up even higher than that point. So it already went on this monster move, and then it was able to keep going higher at that time. So you can never assume at that point, but isn't it amazing at how sometimes Wall Street will realize ahead, and we don't have the numbers before that, but those numbers are probably pretty solid too. It probably excited me even more. Now I remember this 2013 because a lot of the biotech started running. at that point. So sometimes there's a catalyst, there's a fundamental change in the whole industry, and they can also all do really, really well. Now let's go over another example here. Here's applied materials. And let me just take a look at some of the other questions here. Okay, we'll go over some of these at the end here. Okay, so let's go over applied materials, a more recent example, and this one, as we all know, has gone on a great run, and so you can see here that it went from -4 earnings per share on a quarterly basis, on a percentage basis, to 17, to 52, to 128, to 158. I mean, business is pretty good for these guys, right? And then, of course, their sales kept getting better and better too. Right, so these guys are a semiconductor. Obviously, a lot of semiconductors have done well. Just think about all the different products that need it, and all the products that we want, all the mobile phones, all the flat screen TVs, everything is requiring, all these chips required. And then, of course, think about artificial intelligence and machine learning, all the cloud stuff that's happening now that every company needs to be on. Right, so all of these things require chips, and these guys are well positioned on that, obviously, just by looking at those earnings and sales, right? And so here's their chart during that time as these earnings and sales were starting to go, and then this is how it kept getting better and better, right? Because it's not only the industry group, and we know the semiconductors have done incredibly well over this year. It's always those few ones that are the true leaders that do even better, right? Because as the market is growing, those dominant players are capturing even more, right? And so they are the ones that the large companies want to do business with, right? They're going to go with the big brand names, and Applied Materials is one of the best out there, and they've dominated during this time, and what a remarkable run. From 2016 all the way through here. It's going from around, it looked like it broke out around here, around $19 out of this cup. It's trading at 53. All right, and look how smooth it's been over this time right here. Just pretty smooth sailing at this point. And now, of course, it's just recently broke out again, and it's currently 13% from the pivot. But that's where, even at this point, you can't necessarily assume that it's done. And you can see we have 16 quarters of earnings percentage running along right here. And they've been pretty consistent. Even at this point where the market was kind of coming in, the market kind of brought down the stock. The company was still doing its thing, right? The innovators aren't necessarily worrying about a bear market. They're worrying about making game-changing products. And so eventually, if they continue to do that, they're going to be rewarded at that point. Now, of course, the classic example, I think the one that, well, at least I can relate to, but I think a lot of people these days can relate to is Chipotle, because it's not always those technology stocks that go, or the medical stocks that go great. Sometimes they're just right in front of you. You're using that service. And these, in my opinion, a lot of times are the best, the ones that you have the best chance of capturing and really capitalizing on, because you understand the story. You're using the service. You can't do without it. And so I love using this example because who would have ever thought that they would have these kind of monster numbers, 49 to 84 to 91. That was back in 2008 right there. When the market was getting hit, Chipotle is still doing their thing, right? They're still making their burrito. They're still expanding. They're still having lines out the door. And eventually Wall Street recognized that and started rewarding it when the market came around, right? Remember, 3 out of 4 stocks go with the market. But eventually, once the market gets back in an uptrend, that money's going to flow to those game-changing companies. And Chipotle, without a doubt, was a game-changing company over the last 10 years. Not only in their product, and not only the fact that people are willing to go there every day, me included, but they were very innovative just on just the way they did all that stuff, how efficient they made it, how few workers they needed to run an operation. And so all of that stuff, and that's all getting an edge on the competition. And they weren't even really advertising at that point, too. It's just word of mouth. And then just the lines out the door. I remember friends always telling me, hey, have you gone to Chipotle? Have you tried that Chipotle? That all kind of, you all want to just get used to picking up on those kind of signals and then asking yourself, hey, is this company publicly traded? Let me pull up Let me pull up my MarketSmith phone. Let me go on my computer. Let me go to MarketSmith and take a look at their numbers and see if, because I like the product, I'm using it. Let me see if the numbers are confirming that. And so they had another triple digit there. And of course, their sales just going through the roof. And that was probably contributed heavily by me during that time while I was going to Chipotle every day. And so that's how it looked back in late 2009 and into 2010. You can see it went on a really good run back here, right? But then the market brought it down. And so what happens when the market gets going again? Stock just starts to set up again. And so then it just goes on this great run again, right? And that's when it became a classic kind of canned slim stock, a classic growth stock that we look back on because you can see the perfect cup with handle that it broke out of here. This is one of the best stocks to go back and study over the last 10 years because it had everything that Bill talks about in the book. It has everything to confirm that why we look for fundamentals in a great story. And so you really want to go back and do that because guess what? There are going to be other great restaurants out there that come out that are innovative, that have this product and that you're eating down the line, right? And so the more you're familiar with this, the more likely you'll pick up on the next Chipotle in the future. So that's all I wanted to go over today. And so in the end, it always comes down to those fundamentals. It comes down to that story, understanding that product. And so if you haven't done it already, just make sure you're incorporating this type of fundamental analysis in your routine. We're not asking you to go break out the balance sheets and the income statements and going through those, right? We're doing a lot of that work for you. We're pulling out those relevant numbers and we're putting it into a readable format right there on the MarketSmith weekly chart. But it's up to you to go and learn how to interpret this stuff, right? And analyze it. It's all right there. In the end, especially for those of you who are new, the best way you can spend your time when you're on MarketSmith is getting comfortable with the numbers on the weekly chart and then the pattern recognition really chart. You don't necessarily have to worry about a lot of the other bells and whistles in MarketSmith. Just get comfortable with that chart because in the end, it's the data there that's proven the test of time. I was a customer for years and I've seen it over and over again over the last 20 years, how these stocks have come up on the radar because they have these huge earnings and sales, and then they go on these great runs when the market is ready to reward them, right? So you want to just get that into your routine. Make sure you're doing that. And of course, understand that company's story by looking under the surface and to understand why are they producing these huge earnings and sales. That's going to make all the difference. So in the end, just make sure that the stocks you're investing in have those strong fundamentals and a great story. You're going to narrow down that list of stocks you're focusing on pretty quickly, and you're going to see, once those stocks set up those bases, once they're ready to go, once they break out powerfully, you'll find yourself in a few of them, and all of a sudden the market's acting well too, kind of like this year, and that's when they're real reward, and that's where it really makes all the time that you're spending on this and all the hard work that you're putting in worth it at that point. Okay, so that's all I have. Let me put up the contact information, then we'll go over some of the questions right here. And okay, Steve, a screen or list that you suggest for reviewing the earnings? Honestly, the best list that we have, the first list I go through every weekend is the Grow Through 50. That's running 30 different screens using both looking for fundamentals like this, but also technicals. But the nice thing about the Grow Through 50 is it's actually it's trying to pick it up in different ways. So we're not making it so tight that every stock has to have these huge earnings and sales. We're trying to get it on the radar a little bit earlier before they have these huge earnings and sales, right? So sometimes the smartest people in Wall Street, they'll pick up on this way ahead of time and they'll start buying it. They're not going to tell us. And so we might pick it up on relative strength first, right? But then, so it gives you time to recognize those names and things like that. So when you're ready for a larger list, that's really the list I'll go through. Now, of course, within the Growth Through 50, I think there's a fundamental list and stuff like that, or you can narrow it down. Now, of course, you can build screens too. I think probably if you're newer, you can also go use the William O'Neill screen. Okay, so we have a William O'Neill screen that's using a lot of this criteria. We make it a little bit looser so you're not making it too tight. In the end, what you want to do is there aren't any perfect stocks out there. Okay, so you want to try to find stocks that have most of these things, right? And then when they break out powerfully, you take a shot at a few of them, and some of them will end up working pretty well. So they just have most of them. So you're looking for the ones that have the most amount of positives and the least amount of flaws, because it's more you want to find the stocks that have the least amount of flaws to them. Okay, so that's the thing. So the Growth 250 and the William O'Neill screen, those are both probably the best two places to start, just depending on how comfortable you are looking at a lot of charts, right? If you're comfortable looking at a few hundred charts, then Growth 250. If you want a little bit tighter, then I would just start off with the William O'Neill screen. Okay, Steve's asking here: do fundamentals have to be accelerating? What if they have 999, then 200, then 107? Still triple rejected. Either scenario is fine with me. Accelerating obviously is a little bit more positive, right? It's nice to have that, but if they're putting up some monster numbers, they have those great sales, and now you see a great chart pattern and it breaks out powerfully. Say they report earnings. We're in earnings season right now, right? They report earnings, and it's a great reaction to it, and it's a powerful breakout. And they don't have accelerating earnings, but they have these monster numbers. Yeah, I'll take a shot if I like the story and all that stuff. Sure. Okay, so it doesn't have to have everything. Not everything has to be perfect. Yeah, the great question, Steve. Here, he's asking about understanding the story. It's easy to understand something that's like a phone or something you eat, but what if it's an electronic company or equipment company? Uh, what do you do in that sense? This is, for me, I remember a number of years back, a lot of the chemical stocks were doing really well. So I try to read up on them, on the distillation processes and stuff like that. And I fell asleep like every 30 minutes when I try to. So there are some things that you're not going to be able to understand. And so I didn't end up buying them. Okay, and they went on some great runs. I just didn't have the conviction to buy them. So yeah, what you'll find out is that you're just going to end up focusing on stocks you're familiar with. Now that might be a little bit of a bias. You want to be careful of that a little bit, uh, but you don't have to focus on everything. You just want to make sure it's wide enough that if the tech stocks aren't doing well, but the housing stocks are, you have that flexibility to kind of move into housing stocks, right? Or medical stocks, stuff like that. But there are going to be some industries where, at least for me, I just don't get, and I don't understand why this distillation process is that much better than this, and it was impossible for me. So yeah, you're going to have those things. The nice thing is you don't necessarily have to. A lot of the great stocks, a lot of the stocks I've built did extremely well at were retail and medical, and in the end, it came down to because that's what those are the fields he understood much better than others, right? So for me, it's a lot of times technology and retail. Medical stocks, those sound fine too, but they're just not as exciting, I guess, for me, as opposed to. But if it's a kind of this big thing where they could cure something, or all of a sudden they're addressing just a major kind of issue that everyone has, then yeah. But if it's a minor kind of, if it's something that's a little bit more subtle, it might not necessarily be as exciting. I might not have as much conviction. I still might try it, but guess what? I might get shaken out a lot easier on those stocks. Okay, so that's kind of the thing. You stick. I have a tendency to stick with the ones that are more in my wheelhouse, so the ones that I understand. And I think that, but you want to just be careful of being too narrow on it. Okay, so that looks like all the questions that we have. So any other questions, feel free to reach out, okay? 800-452-4422. Our email address is reach us at marketsmith.com, okay? And yeah, this is, we wanted to keep it pretty basic here, but in the end, it's always good to review the fundamentals. It's always good to go back, read the How to Make Money in Stocks book, and make sure you have that part down, because in the end, it always comes down to the fundamentals and the companies and the figuring out and learning which companies are the game-changing companies, okay? So thanks, everyone, for joining us, and we will all talk to you shortly.